On yesterday's stream, we talked about the different key points. We covered 10 specifically points on how to avoid bad investments. And it is all about understanding the numbers. Once we can read financial statements, we can see whether something is an asset or liability. And that's one of the main difference between the wealthy and the poor, is that we can tell truly whether something is an asset or a liability, and we can walk away from any bad liability that we don't want to obtain, because sometimes some liabilities will be obtained to improve them. In other words, if we find a mismanaged business and we get in it from a good deal, and we spot what's missing from that business, and we can implement our strategy and improve the bottom line where now it becomes a true asset, maybe there's something that the current owner is messing out and is not doing it because X, Y, and Z reason. There are many times where we will find mismanaged treasures and we gotta capitalize on them. So the numbers do not lie. The numbers will tell us the exact story behind the deal and what is going on. Therefore, we can measure our return on investment with facts instead of opinions. Never go into an investment thinking that, oh, this might bring me money in the future. That's not an exit strategy. That's not investing with a plan. We have to know exactly when we're going to get our money back, how fast we'll get our money back. Is a calculated risk. There's always risk when it comes to business and investing. I mean, life overall is risky. Think about it. No one is going to get out of this life alive, on this, at least on this physical body. So we have to focus on the numbers, reading financial statements, improving our personal financial statement, because every business has a financial statement, but also every person has a financial statement. And a lot of people have never seen their finances on paper, on a financial statement, like the ultra wealthy do. We examine that financial statement daily so that we can improve the assets column with real assets that we control with our companies that are bringing passive income, or also known as positive cash flow. And sometimes some assets will bring us capital gains income. However, we specifically invest for passive income. Rule number one in our community here at Master Investors is that we work to build passive income and multiply money through sound investing. And it requires financial education. And when we acquire that type of education, we raise our financial IQ, we increase our financial intelligence, and now we can solve financial problems. The bigger the financial problems we can solve, the wealthier and the higher the rewards will be for us. So it's all about becoming generous and giving to the world a solution that is in high demand. Find a need and let's fill it with a solution, with a product-based business, and turn that into a real brand. That way people can continue to use that and pass it on